We're almost halfway through the month of March, and like it or not, tax season isn't far away. Linda Sexton is here from Jackson Hewitt Tax Service to tell us about life changes that can impact a tax return. Linda, it's good to see you again.
Well, thank you, Danny. It's good to be here.
We're running out of time. I got to get busy.
Yes.
And I guess we need to get busy too. What's going on?
Okay. Well, first of all, we're talking about the life-changing events that impact a tax return. Number one, well, first of all, we've had a tornado. That's a huge life-changing event. Now, there is a casualty deduction. You can take that, but like with Katrina, they made some changes to it. And with this, they didn't. And so it's harder for people in our area to take a deduction because, number one, you've got to get over 10% of your income before it starts being deductible, and you have to itemize to be able to take this, which with Katrina, that wasn't the case. And so that is making it harder for the people in our area. There are some that are qualifying, but some don't. So
when you say over 10% of your income, what do you mean? Is that what the loss has to be?
Yes, the loss has to be at least 10% of your income, and then anything over that can be an itemized deduction, and then you have to itemize.
Right.
So
lost
again,
couch, lost bed, and then where would you go for the values on that?
Well, you would have to, well, first of all, we have to know what you paid for it, what the value of it was at the time, and then, of course, the value afterwards, I'm sure, was zero. But you would have to either get some, you could go to a used furniture store or some place like that. It takes some work to get that done. But a lot of them has already filled that part out because they did it for FEMA and they did it for insurance companies.
Gotcha.
Yes.
Super.
So that's one life-changing event.
That's a very negative one. Now there's some positive ones too, right?
Positive ones.
Okay.
Well, first of all, I wanted to say that one of the most common questions is, can you deduct the expenses for marriage or for a funeral? Why they put these two together, I don't know, but they're not deductible. Neither are deductible. There is some, if you get married or divorced, that's definitely a life-changing event. Having a child, getting laid off, a death, a spouse dying, that's a life-changing event. Sending a child off to college, retiring, these are all tax considerations. If you financially support your parents, even if they don't live in the home with you, they may qualify as dependents. A lot of people don't realize that. So I'm going to just take each one of these things, if you don't mind, real quickly and tell you. Well, first of all, for marriage, your filing status, this is a very thing that thing that people misunderstand is whatever you are on the last day of the year is what you are all year long for tax purposes as far as being married. If you get married right before midnight on New Year's Eve, you're considered married all year for tax purposes. A lot of people don't realize that. So there's no prorating. Then you want to be sure that you are filing the most favorable status for you. If you're filing married, filing separately. If you file jointly, you are responsible for the other person's taxes. So you need to know that. But then married filing separate is the most unfavorable status in that you don't get a lot of the credits and deductions that you would otherwise qualify for. And so there's lots of times spouses will say, well, I don't want to be responsible for their taxes. We're getting a divorce. Well, I understand that. And it may be they might qualify for the abandoned spouse situation. A lot of people don't know about that. I'm telling you all these secrets.
Wow, I mean, this is some good stuff.
Yeah. And then
they're about to give me a wrap, but we're going to keep going.
Okay, I'm sorry. And then for the children, of course, there's the child tax credit, the additional child tax credit, education credits, and adoption credits. For unemployment, and a lot of people in our area is unemployed. That is taxable. That's bad, but it is taxable federal. But Alabama doesn't tax it, so that's a good thing. But if you're out of work, you may qualify for deductions such as resume costs, job-seeking expenses. If you have to move and it's more than 50 miles away, you may qualify for moving expense. And one thing to be very careful, if you're out of work, withdrawing your pension. So many people withdraw their pensions and they've got a code 1, you've got a 10% penalty plus income tax, and they really get in trouble with that. And so they really need to seek advice before they do these things, not after, because lots of times clients come into us and it's already done and we have to deal with what's happened. But we give our clients year-round service. It doesn't cost them anything. When they pay us to do their taxes, they get year-round service, and that way they can come and talk to us, find out when to get married, when to get divorced, when to take money out of 401ks and IRAs and things like that. So just be smart about what you're doing so that you won't have to live with it, because once you owe IRS, And then, like the other day, a client brought it in. He's making $100 a month payments. The
Right.
interest is $150 a month. He'll never get paid out.
Never catch up.
Right.
Linda, thanks so much for being
You're
with us
welcome.
today. And we'll see you again in a couple of weeks.
Okay.
If you've got tax questions, just call 205-339-1895 or learn more online at jacksonhewitt.com.